These 6 forms are trapping your $1,570 Social Security check. If you're 60 years old or older, this affects you directly right now, this month. There's a real number sitting inside the Social Security Administration's system with your name on it, $1,570 a month, that a woman I'm about to introduce you to never received, because 2 forms were never filed. One of them is called Form SSA-10. The other is called Form SSA-2. Neither one ever arrived in her mailbox. Neither one was ever mentioned to her on the phone. And by the time someone finally caught the mistake, tens of thousands of dollars were gone forever. Not recoverable, not appealable, permanently gone. Stay with me through this entire video because there are 6 forms in total, not 2, and the final one has the shortest deadline and the largest amount of money attached to it of everything I'm about to show you. Do not skip ahead. The order matters, because the math in the middle is exactly why that final number is so dangerous. The Social Security Administration has your name. It has your work record. It has your spouse's work record. It has your late spouse's work record if you are widowed. And right now, this month, it is very likely holding money in one or more of those categories that the law already says belongs to you. The agency will not call you. It will not send you a reminder letter. It will not flag your account and say, you are receiving $800 less per month than you are legally entitled to. It processes exactly what you file, and nothing more. Everything else, every dollar you never asked for, simply sits there, unclaimed, month after month, year after year. The woman behind the $1,570 number. Let me tell you about a woman I will call Margaret, because her story is the exact reason this video exists, and because the number in the title of this video is her number. Margaret is a retired school librarian from Knoxville, Tennessee. She is 69 years old. She filed for her own Social Security retirement benefit at age 64, and her monthly benefit was $1,040. Her husband passed away in 2022 after 41 years of marriage. At the time of his death, his own Social Security benefit was $2,610 a month, more than double what Margaret was receiving on her own record. When he passed away, Margaret called the Social Security Administration to report the death. The call lasted about 6 minutes. The representative on the phone confirmed the death, canceled her husband's payments, and issued a one-time death benefit of $255. At no point during that call, and at no point in any call after it, did anyone at the Social Security Administration tell Margaret that she was entitled to file a separate form and step into her late husband's much higher benefit instead of continuing to receive her own. The difference between what Margaret was receiving and what federal law said she was owed was $1,570 every single month. She kept receiving $1,040 for 2.5 years until a benefits counselor finally caught the gap. By that point, $47,100 had disappeared. Not recoverable, not appealable, gone. That is the exact number in this video's title, $1,570, and it belonged to Margaret every single month for years before anyone told her how to claim it. The form that would have fixed this in 30 minutes is called Form SSA-10. Form 1, SSA-10, the survivor benefit almost nobody explains. Here is something most people do not understand about how Social Security actually works when a spouse dies. The system does not automatically switch you to the higher benefit. It does not send you a letter explaining that you now have a choice between 2 amounts. It does not run the numbers on both benefits and ask which one you would prefer. It simply keeps paying you exactly what you originally filed for, your own retirement benefit, and it holds everything else indefinitely until you submit a completely separate written application. That application is Form SSA-10, officially titled Application for Widows or Widowers Insurance Benefits. Under federal law, a surviving spouse is entitled to up to 100% of the deceased spouse's Social Security benefit. Not a reduced amount, not a split amount. The full benefit your late husband or wife would have received if you claim it at your full retirement age is available to you as the surviving spouse. But that entitlement does not activate on its own. Filing your own retirement application does not trigger it. Your spouse's death does not trigger it. A phone call reporting the death, like the 6-minute call Margaret made, does not trigger it. Only one thing triggers it, submitting Form SSA-10. Here's the part of this rule that makes it genuinely dangerous, and it is the reason Margaret's story ends the way it does. The retroactive window for survivor benefits is capped at 6 months. That means every single month that passes without Form SSA-10 on file is a month of survivor benefit that can never be reclaimed, no matter what happens afterward. There is no exception. There is no senior official at the Social Security Administration who can override this rule. There is no appeal process that restores a missed month once it has passed. I want you to sit with that 6-month cap for a moment, because it was written into the law at a time when the typical widow remarried within a few years of her husband's death, and the survivor benefit was designed as short-term bridging income, not decades of support. That assumption has not been true for generations. Today, the average American widow is 59 years old when her husband dies, and she will typically live more than 20 additional years after that. The 6-month retroactive window has never once been updated to reflect that reality. Congress has never extended it. The Social Security Administration has never been required to proactively tell widows and widowers that Form SSA-10 even exists. The rule is decades old. The financial consequence is being paid by real people like Margaret, right now, this month. Let me show you the full scale of what this costs over a lifetime. Margaret's monthly shortfall was $1,570. Multiply that gap across 20 years of retirement, the statistical average for a woman her age, and it compounds into $376,800 in lifetime income. That is not a hypothetical number. That income was already authorized under her late husband's Social Security record. It existed in the federal system the entire time. It required one form and about 30 minutes of her time. The form is free. The application takes half an hour. The money is authorized by federal law. And right now, if you are in Margaret's position and have not filed, the 6-month clock on at least part of that money is already running. Here's what I need you to do today, not next week. If you are widowed and currently collecting Social Security, open your account at SSA Gov My Account, or pull out your most recent benefit statement and look at your benefit category. If it says retirement insurance benefit and your late spouse's Social Security amount was higher than your own, you may be sitting in Margaret's exact position right now. Call the Social Security Administration at 1-800-772-1213. Say this, word for word. I am widowed and I want a written comparison of my current retirement benefit and the survivor benefit I would qualify for under my late spouse's record. I also want to inquire about filing Form SSA-10. Do not ask a vague, general question. Ask specifically for the written comparison and ask the representative to calculate both numbers while you are still on the phone. Write down the name of the representative and the date of the call. I want to pause here because what happened to Margaret is not an isolated glitch in one form. It is a pattern, and once you see it, you start noticing it everywhere in the federal and state benefit system. Programs exist. Money is authorized. Nobody calls you. Nobody mails you the form. The only way the money moves from authorized to in your bank account is if you personally go find the paperwork and file it, sometimes with a stopwatch running against you. That exact pattern is why we put together the Senior Exemption Guide 2026. A full, step-by-step guide covering every major deduction, exemption, and benefit available to Americans 60 and older in 2026. Everything from a brand new $6,000 federal tax deduction that most retirees have never even heard of, to property tax freezes in your state, to Medicare savings programs that pay your premiums for you. It is not a general motivational book. Every single chapter ends with the exact form number, the exact agency, and the exact steps to file it, the same day you read it, the same way I am walking you through Form SSA-10 right now. The guide is normally $97. Here's what I want you to do. Stay with this video all the way through to the end, because I am going to hand you a voucher worth $50 off that $97 price. And I do not want you to miss it. Let's keep going, because Form SSA-10 was only the first of 6 forms sitting in your file right now. Form 2, SSA-2, the spousal benefit the online system never mentions. The survivor benefit applies after a spouse has passed away. But there is a separate benefit, just as commonly missed, that applies while both spouses are still alive. It is called the spousal benefit, and the form that claims it is Form SSA-2, officially titled Application for Spouses' Insurance Benefits. Under federal law, a spouse is entitled to up to 50% of the higher earning spouse's primary insurance amount, meaning the benefit that spouse would receive at their full retirement age. This entitlement exists completely independent of your own personal work history. It does not matter if you spent decades as a caregiver, worked part-time for most of your career, or earned significantly less than your spouse over the years. The spousal benefit is calculated off your spouse's record, not yours. Here is the part of the system that quietly causes this to be missed. And it is by design, not by accident. When you go to the Social Security website and file for retirement benefits online, the system builds an application based entirely on your own individual earnings record. It asks for your information, it calculates your benefit off your own work history, it processes what you submitted, and then it stops. It does not ask whether you're married. It does not calculate what 50% of your spouse's benefit would come to. It simply processes the retirement application in front of it and moves on. If you enrolled online, which the Social Security Administration actively encourages everyone to do, there is a meaningful chance that Form SSA-2 was never filed and the spousal calculation behind it was never even run. Let me show you exactly what this costs with a real example. A woman spent 18 years working as a home health aide, then another 12 years as a part-time bookkeeper. Her own Social Security benefit at full retirement age comes to $890 a month. Her husband spent 39 years as a civil engineer, and his primary insurance amount is $3,200 a month. 50% of $3,200 is $1,600, which means her spousal benefit under Form SSA-2 should be $1,600 a month. Instead, she's been receiving $890. The gap is $710 every single month, filed away and invisible because she completed the online retirement application the Social Security website guided her toward, and nobody mentioned Form SSA-2 at any point in that process. And here is something most people, including many divorced retirees, never realize. If you were married for at least 10 years and are now divorced, you are still entitled to a spousal benefit on your ex-spouse's record, as long as you are currently unmarried and your ex-spouse is at least 62 years old. You do not need your ex-spouse's cooperation to file. You do not need their permission. The Social Security Administration will not notify them when you apply. If your marriage lasted 10 years or more and your ex-spouse had noticeably higher lifetime earnings than you, Form SSA-2 may entitle you to money you have simply never applied for, because nobody ever mailed you that form either. Call 1-800-772-1213 and ask the Social Security Administration to calculate what you would receive under Form SSA-2 based on your current spouse's or ex-spouse's record. If you are currently married, bring your spouse's Social Security number to the call. If you are divorced, bring the date and state of your marriage. This calculation is completely free, and if the spousal benefit turns out to be higher than what you are currently receiving on your own record, the representative can walk you through exactly how the transition works. Form 3, the 12-month window that quietly closes forever. This next one only applies if you have filed for Social Security within roughly the past year, but if that describes you, this may be the single most time-sensitive section in this entire video. Under federal regulation, you have the legal right to withdraw your Social Security application entirely and refile it at a later date, but only within 12 months of your original filing date. Once that 12-month window closes, the option disappears permanently, with no exception and no extension. The form that exercises this right is Form SSA-521, officially titled Request for Withdrawal of Application. Here is why this matters so much financially. For every month past your full retirement age that you delay claiming Social Security, up to age 70, your eventual benefit grows by roughly 8% per year. The difference between claiming at age 62 and claiming at age 70 can exceed 75% of your monthly benefit amount for the rest of your life. If you claimed early, at 62, you locked in a permanent reduction of roughly 25 to 30% forever, with no way to undo it once the standard rules apply. But if your original filing date is inside that 12-month window and you have had second thoughts about the timing, that door may still be open. Here's how it works. You repay the benefits you have already received, and your benefit restarts fresh at the higher rate that reflects your true later filing age. It is essentially a one-time do-over, but only if you catch it in time. If you filed for Social Security within the last year, call 1-800-772-1213 this week and ask specifically, is Form SSA-521 still available for my account, and what is my exact deadline? If the window is still open, act before it closes, because once that 12-month mark passes, this right does not return, ever. Form 4, the second monthly payment nobody screens you for. There's a completely separate federal program from Social Security itself called Supplemental Security Income. It has its own application, its own income rules, and its own asset limits, and a senior can receive both Social Security retirement benefits and supplemental security income at the same time. The form that applies for it is Form SSA-1000. In 2026, the maximum federal benefit under this program is $994 a month for an individual and $1,491 a month for a couple. The income limit sits at roughly $2,073 a month for an individual, and the asset limit is $2,000 for an individual and $3,000 for a couple. Your home does not count toward that asset limit. One vehicle does not count either. Here is the exact same pattern showing up again. When a senior applies for Social Security retirement benefits, that intake process does not automatically include a screening for supplemental security income eligibility. The representative processes the retirement application in front of them. Supplemental security income is treated as a separate program entirely, and the question simply is not raised unless you personally raise it. If your Social Security retirement benefit is low, somewhere under $900 to $1,000 a month, and your savings are limited, supplemental security income may represent a second monthly payment you have been entitled to since the very first day you enrolled in retirement benefits, a payment that was never mentioned, attached to a form that was never handed to you. Here is the urgency piece for this one specifically. Call 1-800-772-1213 and say, word for word, I would like to know if I qualify for supplemental security income and I want to file Form SSA-1000. unlike the survivor benefit, supplemental security income pays starting only from the month you apply. There is no retroactive component at all, none. Every single month you wait to file is a month of payment that can never be recovered later. The difference between filing this week and filing next month is up to $994, permanently not recoverable, not appealable. I want to pause again here because we are halfway through the 6 forms, and this is exactly the moment where most viewers start thinking, how many other benefits like this am I missing that have nothing to do with Social Security at all? The honest answer is quite a few, and that is exactly what the Senior Exemption Guide 2026 was built to catch. Inside it, you will find a chapter on a brand new $6,000 federal tax deduction created for anyone 65 or older that took effect on your 2025 tax return, the one most people are filing this year, and that most retirees still have never heard exists. There's a full chapter breaking down property tax relief state by state, including places like Texas, where the senior homestead exemption alone can total $200,000 off your home's taxable value. There's a chapter dedicated entirely to Medicare savings programs, the same category of benefit we are about to cover as Form 5, walked through with every income threshold spelled out for 2026. And there's a full chapter on protecting your accounts from the exact kind of financial exploitation that targets people who have just claimed a large lump sum of retroactive benefits, which, if you followed the steps in this video, might soon include you. Remember, the guide is normally $97, and the $50 voucher I mentioned brings that down to $47. Stick with me to the very end of this video, because I'm going to hand you that exact voucher code, and I want you to actually use it, not just hear about it. And let's finish the last 2 forms, because Form 6 carries the largest number in this entire video, Form 5, the state application that pays your Medicare premium for you. Every month, Medicare deducts a premium from your Social Security check before it ever reaches your bank account. In 2026, that standard Part B premium is roughly $202.90. Most seniors simply accept this as the fixed cost of Medicare. It arrives as a deduction, it has always been a deduction, and it feels permanent. For a meaningful number of people, it is not. If your monthly income falls below certain thresholds, your state is legally required to pay that premium on your behalf, entirely, not reduced, paid in full. These are called Medicare savings programs, and they exist in every single state in the country. The majority of seniors who actually qualify for them have never applied. Before I give you the income numbers, I want to show you why this program is worth far more than most people assume, because the premium is only the beginning. The strongest tier of this program is called the Qualified Medicare Beneficiary Program, commonly shortened to QMB. It does not just cover your monthly premium. It eliminates essentially every other cost-sharing charge that Medicare imposes on you, every copay, every deductible, every coinsurance amount. Under QMB, medical providers are legally prohibited from billing you for any of that cost-sharing. Not discounted, not reduced, prohibited by federal law. Here is what that adds up to across a full year. The Part B premium alone, at roughly $202.90 a month, comes to about $2,435 a year. That is the number most people focus on, but a typical Medicare beneficiary also pays somewhere between $800 and $1,500 a year in co-pays, deductibles, and co-insurance across regular doctor visits, lab work, and specialist appointments. If you are hospitalized even once during the year, the Part A deductible alone is $1,736 per benefit period, and QMB wipes that out completely too. Add it all up, and the real annual value of QMB for a senior with average healthcare needs lands somewhere between $3,500 and $5,000 a year, not the roughly $2,400 most people assume it is worth. The premium is the floor of the benefit, not the ceiling. Here are the actual 2026 income limits. For the Qualified Medicare Beneficiary Program, the monthly income limit is $1,350 if you are single, and $1,824 if you are married. It covers your Part A premium, your Part B premium, and every copay, deductible, and co-insurance charge, with providers legally barred from billing you anything at all. One tier below that is the Specified Low-Income Medicare Beneficiary Program, with a monthly income limit of roughly $1,616 if you are single, and $2,184 if you are married. And it covers your Part B premium in full. Below that sits the Qualifying Individual Program, with a monthly income limit around $1,816 single and $2,455 married, also covering the Part B premium. Across all 3 tiers, the asset limit is roughly $9,950 for a single person and $14,910 for a married couple. And critically, your home does not count toward that limit, your car does not count, and certain burial funds do not count either. Look carefully at those income numbers for a moment. A Social Security check of $1,100 a month, combined with a small pension of $400, adds up to $1,500 total. That falls squarely inside the eligibility range for the specified low-income Medicare beneficiary program. Your state can be paying your Medicare premium for you right now while you're quietly paying it yourself month after month, simply because nobody ever handed you the application. Here's the structural reason this keeps happening. When you first enrolled in Medicare, the Social Security Administration did not screen you for any Medicare savings program. It was never required to. These programs are administered by your state's Medicaid office, a completely separate agency running a completely separate system from federal Social Security enrollment. The two processes do not connect automatically in any way that benefits you. You have to initiate both independently on your own without prompting. One more detail almost nobody knows, including some doctors and pharmacies themselves. If you are enrolled in QMB, providers cannot legally charge you a copay, period. If your doctor's office has been sending you bills anyway, those bills are not legal, and if you have already paid them, you are entitled to get that money back. If you are ever charged a copay at an appointment and you are enrolled in QMB, say this before you pay anything. I'm enrolled in the Qualified Medicare Beneficiary Program. Federal law prohibits cost-sharing charges for QMB enrollees. Please verify my status before billing me. To apply, call 1-800-633-4227 and ask to be connected to your state's Medicare Savings Program. Tell them directly that you want to be screened for QMB, the Specified Low-Income Medicare Beneficiary Program, and the Qualifying Individual Program, all at once. The application itself takes about 20 minutes. One honest note on the Qualifying Individual Program specifically. Unlike QMB and the Specified Low-Income Medicare Beneficiary Program, it runs on a capped federal budget each year. So applying earlier in the calendar year gives you a real edge over waiting until the funding for that year runs low. Form 6, the retroactive check tied to a law most people still don't know exists. This last one carries the largest amount of money in this entire video, and it affects an enormous number of people. In January 2025, a law called the Social Security Fairness Act went into effect, and it did something that had never happened in the entire history of the Social Security program. It permanently repealed two provisions that had been quietly reducing Social Security benefits for public employees since 1977 and 1983. Here is exactly what those two provisions did before the repeal. If you worked in a government job that did not pay into Social Security, as a teacher, a firefighter, a police officer, or a federal employee under the old civil service retirement system, two rules in federal law reduced your Social Security benefit, and in some cases eliminated it entirely. The windfall elimination provision, passed in 1983, and the government pension offset, passed in 1977, told millions of public servants, in effect, because you have a government pension, your Social Security benefit will be reduced or removed. For decades, retired teachers watched their Social Security checks arrive smaller than anyone else's with an identical earnings history. Widows of firefighters saw their survivor benefits cut by as much as 2/3 simply because their husbands had a government pension. Federal employees who had paid into Social Security through second jobs saw almost none of that contribution returned to them. The Social Security Fairness Act repealed both provisions permanently, retroactive all the way back to January 2024. Since then, the Social Security Administration has issued more than 3,100,000 retroactive payments, totaling roughly $17 billion, with the average monthly benefit increase coming to $360. Some beneficiaries saw their monthly benefit increase by more than $1,000. Here is where this becomes urgent for you specifically. Most affected beneficiaries have received their adjustment by now, but not everyone has. And there is one category of people this law affects who may never have filed for Social Security at all, because under the old rules, they assumed their benefit would be reduced to almost nothing, so applying never seemed worth the effort. Under the new law, that math has completely changed. Do this today. Open SSA.gov Tosh My account on your phone or computer, log in, and under Benefits and Payments, find your current monthly benefit amount and write it down. Then call the Social Security Administration at 1-800-772-1213 and say exactly this. I'm calling to confirm whether my benefit was recalculated under the Social Security Fairness Act and whether I am owed any retroactive payment going back to January 2024. Write down the name of the representative you spoke with and the date of the call. And if you are a surviving spouse of a public employee, if your late husband or wife had a government pension, the repeal of the government pension offset affects your survivor benefit too, which loops directly back to Form SSA-10 from earlier in this video. These 6 forms are not 6 separate, unrelated problems. They overlap, and a single phone call can often surface more than one of them at the same time. What this pattern is really telling you Here's the thread running through every single one of these 6 forms. The Social Security Administration runs quietly, it processes what you file, and it holds what you never ask for. It does not alert you when you are receiving $1,570 less per month than federal law entitles you to, the way it never alerted Margaret. It does not send a form when your state is authorized to pay your Medicare premium in full. It does not flag your account when a 12-month withdrawal window is 3 weeks from closing forever. It simply runs, and it waits for you to ask. Here are all 6 actions in order, so you can execute them today. 1. If you have a government pension from work as a teacher, firefighter, police officer, or federal employee, log into SSA-Gov and verify your benefit was recalculated under the Social Security Fairness Act, retroactive to January 2024. If it was not, call 1-800-772-1213 this week. 2. If you are widowed, look at your benefit category. If it says retirement insurance benefit only and your late spouse had a higher Social Security amount than you, call the Social Security Administration today and ask for a written comparison of your current benefit and the survivor benefit under Form SSA-10. Remember, the 6-month retroactive clock is running right now, not next month. 3. If you are married or were married for 10 years or more before a divorce, call and ask them to calculate the spousal benefit you would receive under Form SSA-2. If you enrolled online and received only a retirement benefit based on your own record, there is a real chance SSA-2 was never filed. 4. Look at your monthly Social Security deposit and find the Medicare Part B deduction. If your monthly income is below roughly $1,816 as a single person, call your state Medicaid office this week and apply for a Medicare savings program. If you qualify for QMB specifically, every copay you have been paying is prohibited by law. 5. If your Social Security retirement benefit is below roughly $1,000 a month and your savings are limited, call 1-800-772-1213 and ask specifically about supplemental security income and Form SSA-8000. There is no retroactive window on this one, so apply today, not next week. 6. If you filed for Social Security within the last 12 months, call the Social Security Administration this week and ask whether Form SSA-521 is still available for your account. This 12-month withdrawal window is a one-time right, and once it expires, it is gone permanently. 6 forms: SSA-10, SSA-2, SSA-521, SSA-8000, your state's Medicare Savings Program application, and 1 confirmation call about your Fairness Act recalculation. About 45 minutes of phone calls and account checks total. That 45 minutes is the entire distance between what you're currently receiving and what federal law already says belongs to you. I told you I would give you something real if you stayed until the end, and here it is. Everything we just walked through was about Social Security specifically. 6 forms, 1 agency, 1 system. But the truth is, Social Security is only one piece of what you're entitled to as a senior in 2026. There's a brand new $6,000 federal tax deduction most retirees have never claimed. There are property tax freezes and exemptions in nearly every state that can be worth tens of thousands of dollars over the course of a retirement. There are Medicare savings programs, the exact program we just covered as Form 5, broken down state by state with every 2026 income threshold spelled out clearly. And there are food, energy, housing, and veterans benefits that follow this exact same pattern. Real money, already authorized, waiting on a form that was never mailed to you. We put every single one of those, chapter by chapter, form number by form number, agency by agency, into the Senior Exemption Guide 2026. It is not a book you read once and set on a shelf. Every chapter ends with a numbered list of exactly what to do, the same day you read it, the same way I just walked you through 6 Social Security forms in this video. The Senior Exemption Guide 2026 is normally $97. Because you stayed until the very end, use the code SENIOR26 at checkout. And $50 comes straight off that price, bringing your final total down to $47. That code only works because you watched this far, so use it before you close this video, not after. If this video helped you, do not just like it and move on. Share it with one specific person, not a general post, one widow you know personally, one retired teacher, one person whose name is not the one on the higher Social Security record in their household. That one conversation and one phone call afterward could permanently change their monthly income for the rest of their life. And if you want the next video the moment it goes live, because Social Security rules, Medicare thresholds, and federal benefit programs change every single year, subscribe and turn on notifications now before you forget.